AI has recently been introduced to consumers, and even dumbasses like me are taking interest. But in all reality, big software companies have been using AI for a while now to help them with much bigger brain projects such as building stars to generate power, create algorithms to manipulate the stock market, and to manipulate you into buying whatever they want you to buy, as well as use virtual AI models to program robots, which will eventually take over the costly man-powered workforce. While big tech companies such as Google, Facebook, Microsoft's OpenAI recruit their armies of pencil neck coders and programmers to try code and build the next big program or software that will revolutionize the world using this AI technology, our friends, the thick neck, big body lads at Nvidia, are living in the real world building real hardware in order to facilitate everyone else, making Nvidia the true backbone of AI. When everybody is digging for gold, it's good to be in the pick and shovel business. In January 2022, Nvidia revealed that Meta has chosen Nvidia's chips to train AI models, Nvidia and Google Cloud to create industry's first AI on 5G lab to speed development of AI everywhere, and Microsoft's OpenAI ran on Nvidia GPUs. According to Forbes, many reputable names in the space estimate the AI industry to be worth somewhere between $13 to $16 trillion by 2030. But that's just 2030. Considering the internet today is worth $50 trillion, we can only imagine that as AI development expands past the internet and into the real world with things like robots, its advancements in engineering and medical, AI can be worth over $150 trillion easily within the next 20 years. But why is Nvidia so involved in all these different AI ventures? Well, Nvidia produces graphics cards, which is super important in powering the brain and the models behind AI. For advanced AI models to be able to learn all the information, then process all that information to generate an answer, create art, or reprogram different models based on what the AI has learned, requires enormous computing power. And that's what Nvidia as a company provides. Now, while Nvidia has held the competitive advantage for a long time in the AI space, AMD has been coming recently with some ultra powerful chips, and from my personal research, it looks like it's Nvidia's biggest competitor, and whichever one of these can separate themselves in the AI space in the next couple years will be the shovel and pick of choice for these massive tech companies. But unfortunately, in the tech and especially the tech hardware type space, when we're talking about these massive large-scale companies, it is a winner-take-all situation. Now, Nvidia is just the bigger company at a market cap of $347 billion compared to AMD's $102 billion. And even though AMD has released some chips that will compete with Nvidia in the AI space recently, Nvidia has shown a much greater ability to innovate, as well as it has current relationships with Google, Meta, and OpenAI that it not just benefits from currently, but it can also use that knowledge, experience, and research and feedback to develop better products in the future. So we've talked about how Nvidia is affecting the big companies, but how does Nvidia make money from its consumers, not just business to business transactions? Well, Nvidia is a big graphics card producer, which means it's not only selling to businesses that are trying to build companies like the metaverse, but it's also going to sell to the regular day consumers who are trying to access the metaverse, as you'll probably need a powerful computer with a great graphics card or a great virtual headset with a great graphics card. Do things in the virtual world, you're probably going to need virtual currency, such as cryptocurrency. And we know big money in crypto mining comes from having the fastest and most powerful graphics card. So they've solidified themselves in the business to business transaction as well as the business to consumer type transactions. Now, so far in this video, I've strictly talked about how Nvidia is building hardware to facilitate other companies as well as consumers to access and create more powerful artificial intelligence technology. However, it would be negligent of me to not talk about Nvidia's plans to create its own AI programs as well as its current ongoing AI programs. Nvidia currently has many different AI projects going on, mainly focused around machine learning and creating energy and processing power efficient forms of machine and artificial intelligence learning so that machines can learn for 44 years within 36 hours and become much more efficient. Now, OpenAI has already made programs like this much before Nvidia had anything to do with it. However, what Nvidia does is they make the models much smaller so that smaller AI companies can access it as well as everyday people. Nvidia also plans to build a new supercomputer supercomputer that will be for AI research. It'll be for company research only, and it'll be the most powerful super AI computer in the world. Now, this is a fantastic project for Nvidia, as it will not only give them access to a supercomputer that will be able to run crazy AI models that will surely help them in different aspects of maybe improving their chips or improving their production process, improving their robots, etc. But like producing a Formula 1 car or a rocket ship, knowledge they gain from building this supercomputer will trickle down into consumer GPUs and solidify their competitive advantage in the consumer space, which will give them more funding, cash flow, and revenue to focus on trying to build the best products possible, to really focus on that business to business and sell to OpenAI, Google, where the trillions of dollars will be headed in the future. So now that we've discussed the future of the company, what it's trying to do, and why it can be so profitable in the future, let's look at the actual stock price today. Okay, so in the last year, the stock price is down 53%, meaning that you can pick it up pretty cheap from its much higher points over a year ago. In the last 6 months, it's still down 11%, and just today it's down 7%, but obviously depending when you're watching that, it'll be changed. So it's on the downwards trend currently. But that's not necessarily a bad thing considering the macroeconomic climate that they're currently in, with it being very difficult for them to buy the resources to make chips, as well as the consumer market not necessarily wanting those high-powered graphics cards right now. If we look at their quarterly financials, in January of 2022, if we looked at $7.6 billion in revenue, their net income was $3 billion. Where if we look in October 22, the revenue has only dropped by a little over $1 billion, so which is a lot. They're down to $5.9 billion in revenue. However, their net income has dropped all the way down to $680 million. That's a net profit margin drop from 39% all the way down to 11.4%. Now, this is terrible for them in the short term, and it's definitely one of the reasons that their stock price is falling so dramatically. However, it does create a good opportunity for us investors that want to buy when it's low, considering, eventually all the prices will kind of go back to normal how they were. Obviously, inflation will mean the price will be higher of the resources that they need to make the chips. However, it'll kind of balance out equal to inflation, so their price will be more expensive and eventually their profit margins will go up, meaning that eventually stock prices might return as their net profit increases once again. But not only will their net profit will increase, in my opinion, based on the reasons that I've been saying in this video, I also believe their net revenue will go up a lot. Okay, this year's been kind of a downfall for them. They started off in January year over year up 52%, and now in October they're down 16% year over year in revenue, which isn't a huge drop considering the market. If we look at their competitor, Intel's revenue in the quarter of December 2021 was $20 billion, and it's dropped to $15.3 billion. Also, their net income, their profit margin has decreased by 80% in the last year. December it was at 22% to 6.6%. So it's kind of, and they are the industry leaders in consumer chips. So you can see even they have had a harsh year. But either way, guys, that's the end of the video. If you guys enjoyed it, please leave a like, subscribe. I really do appreciate it, and I'm out. See ya.